usually talk to Dan about specific tech names. So are there any opportunities or risks presented by this new tariff threat from the president, Dan?
I mean, I think absolutely. If you look at it, obviously the semiconductor space is the biggest that we're dealing with. That's where a lot of the intellectual property theft that the current administration is trying to protect us from China. That's where that's involved. Obviously, that's where a lot of the tariffs are involved. And that's where a lot of the American, know-how, ingenuity comes out that we're trying to protect the U.S. companies and their IP. So I think that's, really where the threat is in the hardware side and specifically semiconductors.
What about Apple, Dan?
Well,
How
I mean,
vulnerable is Apple to the new trade threats? It's been on the front lines here and even had to cut guidance once on China.
Yeah, I mean, absolutely. I mean, as you probably remember, back in August of last year, while every other stock was getting hit, Apple sort of seemed immune, and we came out and said, look, if you're worried about China, it's silly not to be worried about Apple because, Apple's business in China is a big percentage of their revenues. It's about 18% or so. They blamed, or Apple, I should say, blamed China as a big source of these issues in the trade negotiations. I think, quite honestly, it is a different problem. That obviously has something to do with it, but the biggest issue being the average selling prices of these phones were way too high. Obviously, we saw over this last quarter that Apple started to cut pricing, and that helped to kind of reinvigorate growth. But, yeah, clearly Apple is going to be affected by this, no question.
Dan, you though have some doubts, and it's David, about the ecosystem that Apple is creating of recurring revenue in terms of their ability to continue to increase it at the rate that they have, don't you? Some of it going back, in fact, to even the deal with Google and anniversarying that. Can you explain?
Yeah, excellent memory on your part. Yeah, completely. If you go back, if you think about the Apple story, maybe taking one step back further, I mean, it's continued to change, right? So if you were bullish on Apple in late 2017, the bulls were saying, oh, it's a super cycle of the iPhone 10. Clearly that didn't work out. And then when that didn't work, it was, well, services is going to be great. Well, if you look at services, services grew in the June and September quarters at 25 to 26%. In December, that decelerated to 19%. And then in the most recent quarter, that decelerated again to 16%. Because what do the services sit on? They sit on iPhones. And iPhone units are continuing to fall. If you look at the most recent launch of their new streaming service, even the bulls couldn't really come up with it being particularly good. There wasn't a whole lot of content. You compare that against Disney. Disney had an amazing launch of what they said they were going to be able to do. And so I think if you look forward in time, I mean, we've seen this in the tech space, and that's what makes investing in the tech space so difficult, is that you have market leaders supplanting other market leaders over a period of time. And I think with Apple, you're not seeing much innovation. With Amazon, on the other hand, which, obviously Berkshire is investing in, you're seeing a tremendous amount of innovation. And I think that's the big difference between those two, companies.
Dan, we talked in recent months about your preference for software names over hardware names. I think last week on our air, did you say you were net short semis in general? Has China trade today done anything to embolden that trade, or as prices get cheaper, does your position soften?
No, I mean, it's really based on fundamentals. I mean, it's a great question you had. No, I mean, we're net short semis. We've remained net short semis. We added to those positions actually on Friday, which obviously today it's lucky. But in terms of, when we think about this fundamentally, it's pretty simple. I go, well, with semiconductor companies, almost all of them are still cutting forecasts going forward. At the same time, the space is going to all-time record highs. So the multiples are obviously going way up. And, if you look at the end markets, it's not like PC demand is growing that well. We obviously heard that from Intel. It's not like smartphone demand is doing particularly well. It shrunk last year. It's going to probably shrink again this year. And autos are obviously under pressure, which is another big end market for semiconductors. So when you look at all of that, the risk-reward for me in semis, isn't there, and I think there's a lot more downside, especially as we go through the summer. I mean, the stocks are actually hanging in remarkably well today. But, if this continues forward, which I think it might, you would expect to see a lot more downside there. the flip side of it is, if you look at the internet space, they don't have any business with China because the bad news is that they've been locked out of China. I mean, you talked about earlier how, Twitter's getting scrubbed, et cetera. But, there's not a lot of business that goes in there, so those are the names I'm looking at.
And just to be clear, Dan, on your Apple comments, are you short Apple right now?
No, we're not involved in Apple, but this
Okay.
is what I would tell you. We will be short that stock again before the fourth quarter because I think the expectations that people have for this year's Q4 is completely out of whack. Because if you think about it, there's no 5G phone coming out, and investors are looking for 42% sequential revenue growth in December. This last December, they did 34. So I don't think they're going to make that.